What is the role of digital currency within the global political economy?
Hi everyone, so today I'd like to introduce you to Christian, which is actually the CEO from Baltasaar, which is a platform that is helping to easily raise funds and issue those financial instruments, and also the co-founder of EdenBase, which is an ecosystem for super growth. So the title today of our panel is about how digital currency are actually affecting the global political economy. So yes, cryptocurrencies actually have the potential to really influence macroeconomic system as well as the financial system and the money supply as well from all the governments. We see the press that actually speak a lot about potential securities breach, such as hacking. We also see a lot of the press talking about the finance, let's say, of illegal transactions. But little actually is spoken about the implication of all these new private digital assets on the monetary policies used by a government, and especially all the financial tools and instruments that governments are using in order to kind of control the monetary policies. So this is why today we are going to talk a lot about the possibility for governments to create the central bank's digital currencies, CBDC. And we'll start with maybe Christian, you want to elaborate a bit on the advantages and how favorable you are with the issuance of digital currencies for central banks?
So thank you very much for the introduction, Beatrice. Happy to do so. So first of all, let me quickly put the narrative in a bit of perspective. I mean, at Baltasaar, what we do, we are on a mission to enable an unrestricted, instant, and ultra-convenient capital market experience for participants. And that we do by transforming actually the instruments and the distribution. And for that, we also rely heavily on government regulation. Because in the end, what we do is we do capital market measures and allow companies to issue, for example, a debt note or a mezzanine note. And CBDC is mainly important to us when we speak about institutional money flowing in to these instruments that we require in the secondary market to have automated clearing and settlement. So right now, everyone is relying on some of the stable coins, such as Tether, where you have like, 16 billion in US dollar coverage. However, nobody really knows how much is covered in the end when all people run to the bank and look to get their money back. So in that context, it's for us a thing that needs to be done or should have been done yesterday already, that the central banks are issuing a CBDC in order to guarantee the transactions to be, first of all, valid, that we have a transparent, smooth and swift clearing and settlement. And so I'm very much in favor, and this is also one of the main advantages that I see. Disadvantages, and there is the typical German take on the whole situation. Obviously, there is a couple of privacy and data privacy concerns that would need to be addressed. However, with the ascent of GDPR, that is something that could be much easier incorporated if you actually have an ecosystem that allows smart contracts to work in an integrated manner instead of like putting together several solutions. Because in the end, what we are having whenever we do a business transaction is two accounting systems talking to each other. And without the intermediary, without having so many intermediaries in between, a stable coin from the government, from the central bank, can spur off innovation and can spur off the transactions significantly.
Daniel, anything to add regarding the advantages, and are you favorable as well on CBDC?
Okay, thank you, Beatrice. Let me give you a quick background to me. I started in fintech in the 90s when derivatives were coming to the market, which I think was probably the first disruption in fintech. It was very early in those days, and I wrote a lot of the tech that ran the derivative market. I got involved in software disruption and entertainment disruption in the late 90s, which again was about transferring value. We turned the entire value chain for the big software companies and games companies on their head, and allowed them to distribute globally. I spent between 2004 and 2011 advising the EU on growth, economy, education and innovation, and a lot in IP, and was very involved with the UK government and the EU after the financial crash, advising Sarkozy, Barroso and Brown on the recovery. And I learned about blockchain in 2016 after trying to invest in a lot of AI companies in 2015 and thinking it was a bit early. And through this, I really believed in the blockchain and the future of crypto. And I created a project called the Atari Token Project in 2017. Left the project actually in May 2019, which was trying to bring a sort of regulated, efficient NASDAQ-listed company to launch a crypto, which in 2017 was quite unique, and also to create future of the work. And now I'm involved in creating super growth companies. So I do think about these things very carefully, and I would put myself as an optimistic skeptic. You know, I try and change the market. I try and do things that I think are right. And having bought Bitcoin in 2016 and ETH and a few other coins, I think we're still very early. And banks and central banks don't like early. Central banks are there to manage economies, to keep their currencies safe, to keep their customers safe, which is, and their customer is the government and their the owners of their currency. Mm-hmm. And so whilst I'm a massive fan of crypto and a massive fan of CBDC, I think we have to look at where the advantages are and what will happen and what the disadvantages are. So I think one of the big advantages is no more cash. You know, cash is post-COVID is dirty. It's, you know, people don't want to hold it. But also, how much cash do you use? I did a quick calculation this morning. 2% of my transactions are cash nowadays. You know, so what are we replacing with this? And then, but then the advantage is, what do the central banks say? They want to address the decline in cash. Maybe this will, maybe this won't. They want to meet the future. And again, I'm not sure that central banks are there to meet the future. I think they're there to protect what we've got. They say it's more efficient. Yes, I agree with that. And they talk about financial inclusion, which is an area that Atari Token was really strong in, and I spend a lot of time thinking about. But I'm not sure it includes more than cash. So what are the disadvantages? I think if I look at the disadvantages too, there is a value of cash. It's very light. You don't need tech to run it. I can go running in the morning, put some money in my pocket, and if I get into trouble or need a taxi home or need to buy water, it's easy. I don't run out of batteries. My phone doesn't crash when I'm traveling. And when you look at central banks, what do they see as the issues? Well, they see the weakening of banks. And a very fast weakening of banks is not something that I want to see. I don't mind a future without banks. I haven't thought of what the problems are with that, but I don't want to see it very quickly. It limits the control of central banks, and we have to be very worried about that. And it's also subject to a cyber attack or a large-scale attack, which cash isn't so easily. You can counterfeit cash, but you don't counterfeit the entire system. And I also think one of the things that we forget about, I think, when we're talking about this is cross-border transactions are great, and this will make them easier. But one of the big issues is FX. You know, cross-border transactions often involve moving from one currency to another. And I think a CBDC will actually hasten the thing that we don't want, which is a global currency. And I suspect the global currency will be in the strongest economy in the world, which with the biggest army, which is the US. So that's really where I'm sitting from. But as I say, I'm very optimistic. I think this will happen, but I think the way it will happen actually is through things that Christian is doing. What Christian is doing is he should be where the competition is. He should be the guys that are trying this out. He should be the guys that are making mistakes and fixing those mistakes. And when that's solved, then the central bank should move in. And the one country that's moving fastest with CBDC is China. But it's not doing it for the reasons that we want it to do it. It's doing it for control. It's doing it to usurp the dollar. It's doing it for security reasons. And I think with what we've seen with Ant Financial recently, I think they're doing it to seize back control of the finance of their finances, which I think they've allowed to go into the digital space very quickly. And there was one very interesting comment by one of the members of the ECB board this week, which is once you do he called it digitalization, I call it digitization. Once you do that, you can't go back. So I think these things have to be cautious, but I'm very comfortable with what people like Christian are doing, and I think that's really the way that we should do this.
Yes, actually, Christian, would you tell us a bit about the cons that you see for governments in issuing CBDC?
So it really depends on what kind of approach we're taking, because obviously there is not one approach to issuing a CBDC, but there is multiple. We're talking about a direct approach. We have hybrid situations where banks act as wholesale lenders and the CBDC directly, and then we have indirect approaches. So all of them come with pros and cons. Some of the cons are, and that is something I like very much that Daniel said, that we need to be very aware of how value is transferred, and the value transfer needs always to be protected. And banks play an important and a pivotal role in that. And so by issuing a, for example, direct approach, CBDC, I don't see that happening. I mean, we need a multi-layered and multi-tiered approach to this. First, starting with the register technology, that everybody can use the distributed ledger as a register. Then at some point, we can start capitalizing that register, meaning organizing ownership of money and assets and the transfers of them. And then at some point, reach a setup where we have a programmable euro, dollar, yen, and can actually tokenize assets. So the cons for CBDC are, in my opinion, not like you cannot say it's a contra, but rather a question of how to approach it and how to embrace it. Because I absolutely agree with Daniel. I have even less than 2% cash transactions because I'm not getting miles and more points for my flights when I pay in cash. So, and I equally agree with that once the toothpaste is out of the pack, you won't get it back in. So once you are digital, you can't unroll it or undo it. And these are all potential downsides when you move too fast, too early, or not in a very well level-headed way. So one of the cons that we're having right now is that we rather speak about what is the right approach rather than how can we multi-tier the approach in a way so that we don't face massive drawbacks and downsides.
Yeah. And Daniel, actually, do you think central banks have really the power to influence the stability of digital assets and Bitcoin? Because obviously this is one of their biggest fears, and that's why they are a bit holding back for now.
Well, that's a very good question, Beatrice, because I think one of the reasons every central bank is looking at CBDC now is because of stablecoins, and they're worried about that it will leak to something they can't control. Mm-hmm. But in terms of digital assets, I mean, digital assets is very different from central bank digital currencies. Again, I'm a massive optimist on tokenization of assets. Again, I see a lot of drawbacks with it. I think, one of the things that people they look at all the positives, but they don't look at why we've got here. And having spent a long time in innovation and disruption, I mean, close to 30 years now, you've got to realize why people make the moves they do and why markets often exist in the way they do. So, I spent a lot of time looking at real estate tokenization in 2019. And there are big issues with moving from a market that is built around illiquidity to liquidity. So you've got to really concern that. In terms of, Bitcoin and stability, I'd probably say something quite controversial now for the Bitcoin community, which is we've had 10 years of Bitcoin, and it's a phenomenal technological and model advance. But we know what's wrong with it now. It's had 10 years, and you can write down, if you wrote down a matrix, if we were honest with ourselves, what's great about it and what's not great about it. And I think we're too late actually to resolve some of the things that are wrong with it. And innovation is about changing things and creating new models. And I think this fascination with Bitcoin being the currency is not right. The only way that banks could, I think, central banks could decrease the volatility is to buy loads of Bitcoin and manage it by buying and selling like they do with their own currency. And I don't see that that's possible now without driving the price so high that it would then collapse after they've got it all. So Bitcoin is very interesting though, because if you're an FX trader, I'm not, but I speak to FX traders. It's pretty much the first time in history that we've got a digital asset that you can move out of a currency into. Before that, if you had dollars and you wanted to exit dollars, you would buy yen. You might buy gold, but it was physical and you've got all the issues with gold. But now you have this non-state asset, and I think that's fascinating. And I really think that's a really interesting thing for the world.
And actually, we see, like, when we look at CBDC, I mean, there are kind of two ways that they could be implemented. I mean, the two main one at least. So we see like the most radical one, which would actually give access to all retail investor and capital markets to hold reserves and deposits at the central bank. Or there is, let's say, the more moderate option, which is only to allow banks to hold digital asset deposits at the central bank. So if you were in a position to choose, let's say, Christian, which one would you implement?
So obviously, embarking on a direct approach will be a governmental suicide. So they cannot just allow everyone to gain access to central bank deposits without actually making banks themselves obsolete, and then taking away the buffer that banks are today and will be in the future, until we have first of all, fully understood what the real monetary policy implications are. And secondly, it wouldn't be possible from an infrastructure standpoint of view anyway. So therefore, the direct approach is very important and interesting to think through. Mm-hmm. However, it shouldn't be written on the flags right away. So where I see a use case scenario is with a hybrid approach, and then pick out some of the rather generalized and standardized processes that are currently already standardized and generalized, such as order-to-cash and purchase-to-pay processes. Whenever you have some of those in a cross-border environment, then a stable coin could actually further the use case, highlight the advantages and disadvantages without posing significant reputational risk to the central banks as well. But yeah, as Daniel said, once the toothpaste is out of the pack, you won't get it back in. So if there is an issue with a stable coin that was issued by government, then the counterparty risks are much more significant than if we have small players now testing the waters.
Yeah, and actually the European Central Bank, the ECB, has actually studied all of that, and they are pro-technical innovations. I mean, basically, they think technology should serve us, not the other way around. And I mean, this is a good point, to be honest. But there are, yes, 80% of all European countries that are really heavily studying the issuance of their own digital asset and potentially of digital euro. So guys, are you for? Are you against? I mean, I think you are for. But and when do you think this would be applied? Basically, when shall we see a digital euro?
Look, I'd just like to add to Christian's point, which is I don't think we want central banks competing with the market, So, and I was just thinking when you asked that question, I hate phoning my bank. It's an awful experience, getting money back, doing this, doing that. But try phoning a civil servant or a bureaucrat and getting your money back. I would prefer a bank over phoning my central bank and having them deal with it. There needs to be competition in the market too. If you have everybody is dealing directly with a single entity, I think that's very, very dangerous. And we've also got to, just to highlight what Christian said, because I like his toothpaste out of the bottle analogy. you've got to consider, unintended consequences. When I was doing a lot of advice for the EU, there was a story from one of the, I think it was Croatia or Serbia or one of those countries, where they put up tax on alcohol because they wanted to stop people drinking as much. And actually what happened is alcohol sales stayed the same, but the chocolate market collapsed. They sold no chocolate in the country for weeks and they had to unwind it. And the reason was people still drank the same amount of alcohol, but they didn't have any money to buy their kids chocolate because it was too expensive. So these are unintended consequences. You can change that very quickly. But as Christian says, if you do this and you find there's an unintended consequence, you damage the banks, you prevent competition like Baltasaar from doing what they want and innovating, I think that's a real problem. So when do I see this? I don't see it during COVID. COVID's done one thing, actually, it's made cash even less used because we don't transact as much, and also we don't want to hold cash. And a lot of businesses here won't take cash in the UK anymore. But also, governments and central banks have a lot more to worry about than the central bank digital currency. They have just printed more money than in the history of the world. And we have to unwind that first. And I would just say a geopolitical point on this. We have a very nervous population globally. We have people going in the streets, rioting, demonstrations. The Black Lives Matter, for instance, was clearly, in my opinion, the fuse from people being locked up for 4 months in the US and the UK in terrible conditions. The last thing central banks should be doing now is trying new things that people will see as a way of controlling them.
Okay, Christian,
Because
last word as
that,
well,
I
because
think, will be
we are soon done with the time. Sorry.
All right, so I love the alcohol taxes going up and chocolate sales going down analogy. Daniel, so with your permission, I'm going to use that in one of my speeches in the future as well. I have to do some research on it.
It depends if it's the Tesla tequila.
Yeah. So regarding timelines, I mean, what Daniel said makes perfect sense. It doesn't make sense to start with a top-down approach in terms of the ECB directly issuing CBDC, but the private sector moving in first, and then in a public-private partnership setup, look at the various options as they go along. So now we are in a knowledge building stage, clearly, and we might be in 2021 seeing DLT-enabled payment APIs. Where we can connect to the standard banking infrastructure, which is possible to some extent already with the HCBI and PSD2. However, then we would be looking at establishing, first of all, a framework and a standard for a euro token that can be issued on several and various DLT networks, because there won't be the one that will prevail from the start right away. And then at some point after having these POCs show all the real world implications, move towards a formulation of a European central bank issuing a CBDC in what is it, 2024, 2025, okay. The earliest.
Okay.
Look at the China timeline, that's pretty much in tune with how long they need it, even though we're 6 years behind already.
Okay, thank you very much, Guy. We had the time that ran out, but it was excellent, and thank you very much.